Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary, and we'll take you through the next half an hour or so of trade. Let's take a look at where the markets are right now, and it's finally we're seeing a little bit of a drop on the benchmark Nifty 50 as well as the broader markets. I say finally because we've seen quite a bit of chop and churn over the past several sessions, but we've seen very narrow ranges. Today, however, you've seen a cut of about 0.5% or thereabouts. We're off the low point of the day, but we're still trading with cuts of about 200 points or thereabouts for the Nifty 50. The broader market seeing bigger cuts. You have the mid-cap index that's down over 1%, 1.4% to be precise, or 1.3% to be precise, but it has picked up from the low point of the day. The small cap index has also recovered quite substantially from the low point of cuts of over 2%. It's now down just about 1.2% or thereabouts. So very clearly the market breadth tilted in favor of the declines right now. Take a look at some of the contributors on the benchmark, and that in fact is going to present the picture for today, because today it's a tale of two stocks in the automotive space. Of course, Maruti Suzuki contributing to a very small sliver of gains for the Nifty 50, but the big loser on the other end of the spectrum is Mahindra and Mahindra. Despite the weightage that it has on the benchmark, it's contributing a decline of as much as 42 points on the benchmark. And we'll get to why in just a bit. But do note that Reliance Industries among the heavyweights also losing ground, and you would see HDFC Bank also, as well as ICICI Bank, the heavyweights on the benchmark, are leading the declines. Not too much to speak of in terms of individual movers today, but the sectoral picture is also going to present the same scenario, which is mostly everything is in the red, and that continues to be the case right now as well. The big losers, of course, are the auto pack, down about 2%, led by Mahindra and Mahindra. Let's talk about why Mahindra is losing ground. Down, if I'm not mistaken, continuing to lose about 6.5%. At this juncture, the market cap erosion is close to about 24,000 crore rupees. The reasons are obvious to those that have been looking at the space for some time, but it may not be obvious to you, and so therefore let's get Puneet in to tell you about the key reasons why the stock is under pressure today. Puneet, there's a confluence of factors and it's reached a tipping point, but what according to you are the key parameters to look at?
Yeah, thanks for that. Now, there are 3 to 4 key reasons why we feel that this particular fall of roughly 25,000 crore in market cap today has happened. The first one is, of course, the longer waiting period that the customers have to wait for getting the particular car from Mahindra and Mahindra. Now, on variants of the top variants of XUV 700, the waiting period was as high as 8 months on some models, and this is not a problem which has happened this year. It has been persisting for the last 12 to 18 months, which is a key problem for customers as well. We look at the second reasons. The second is their complete absence from the hybrid space. Now, we have seen the UP government yesterday come out with a notification where they will be waiving off any kind of registration charges on hybrid vehicles, which is a key positive for Maruti Suzuki. We saw a run up in the stock yesterday, and it's continuing the momentum today as well. The savings is roughly in the bracket of roughly 1.8 to 2 lakh per vehicle, and Mahindra currently does not have any models, and post the interaction with NDTV Profit after Q4, they had mentioned that they don't see the space evolving as much as the EV space, which they're very positive on, and they don't see themselves entering anytime soon. The third key reasons could be that production has been increasing per month, but it has not been in line with keeping in pace, in line with the demand that the products have for M&M. Now, they have also launched the 3XO recently, and some of the variants are, having the highest variant of 3XO has 10 to 12 weeks of waiting period, while the entry-level 3XO has a waiting period of roughly 30 weeks for multiple models as well. So that's one of the key issues. And finally, price cuts by competition. We have spoken about Tata Motors cutting prices of the Harrier yesterday and today as well. While M&M has matched those, customers have a lot of other options as well to choose from instead of waiting for more than 8 months on certain models as well. So this could be 3 to 4 key reasons why M&M is falling into it today. Back to you.
All right. All right, thank you so much, Puneet, for that. And on that note, let me introduce you to the guests for today. We have Sameer Dalal of Natalal and Son Stockbrokers. Soon we will also be joined by our technical guests. But Sameer, let's talk about Mahindra and Mahindra. Puneet jotted down a couple of reasons for the weakness in the counter today, and these do not seem to be something that may be resolved in a shorter period of time. Something like demand that now seems to be weak, and of course the competition for Mahindra and Mahindra. What's your take on the counter? How do you see this panning out? And of course, the impact on the earnings going forward as well.
So I agree that there has been a trigger for the stock to correct. But if you ask me, the real reason for the correction is the fact that it had run up the amount it has over the last 1 year plus, right? The stock used to trade at around 1400, and that also was after it moved up from about 700-800. So if you see, Mahindra and Mahindra has consistently moved up from 700 all the way up to 3000 over a period of time. Now, these were the reasons. People wanted a reason for the stock to correct because at the end of the day, valuations had moved up quite significantly. So if you ask me, is because demand is strong and the waiting period is 8 months, I think that's a great positive to have. It basically means that the demand for the cars are strong and people are willing to wait for the 8 months because they believe the car presents X amount of value to them or, is as good, and they don't mind waiting for that. So I don't think that's a negative. Yes, price cuts is something that is a bit of a negative, and that is going to affect earnings to some extent, which was the trigger, right? Which basically says that now if profitability is not going to be as strong, then why should the stock trade at these high valuation, lofty multiples? So coming back down a bit. But overall, like you said, demand is still strong. They still have an 8-month waiting period for many cars, 3 months for the smaller variants. And going forward, we believe the Indian economy is only going to keep growing over a period of time and the number of cars sold will increase. So Mahindra will do well. But also you got to remember that this is not the main business of Mahindra and Mahindra. Mahindra's main business is the tractor business. And that is something that we should also focus on. Now, if I were someone who focuses on Mahindra's tractor business, if we have a good monsoon this year, which is expected, we've already caught up with the averages and they're expecting it to be slightly above normal. Then if the tractor volume starts doing well, the operational efficiencies and that start kicking through, I believe that will do really well for them, and the profitability from the tractor business will drive the overall growth and profitability. So that is something to focus on. And lastly, to, the one point that UP government has given hybrid cars some benefits, I think the electric vehicles will also at some point come in for these benefits. I think the electric vehicle manufacturers will also talk to the governments of the various states to give similar benefits to electric vehicles. And if that happens, then I think that becomes a level playing field across the board. But for the time being, yes, there is a slight negative. And these were the triggers that led to the correction of the overvaluation.
Just a quick follow-up, Sameer, and then we'll jump into the queries. You point out about the 8-month waiting period. It's something of a pain point for them from my perspective because customers, and we hear about this from dealer checks, customers are actually cancelling orders. They're tired of waiting for long periods of time. It's not like alternatives are not available in the market. It's a highly competitive marketplace, especially in a scenario where prices are being cut by competition. People might actually choose to not wait that entire 18 months or 8 months or the long period. So is that not a negative?
To some extent, yes. If cancellations happen, it is a negative, but the fact still remains that you have 8 months worth of demand, right? So let's assume that 30% of the people that are waiting for that 8 month, who have put their names in for the 8 month waiting period, cancel out and fall off by the wayside because they find a competing car which is as good or something that fits their budget, fits their requirements, fits all the benefits that the Mahindra XUV 700 is offering. That still means that the next guy, the guy who was waiting for 8 months comes down to about 4 or 5 months. So he's a happier person, and then new people come into the system. It's not like that these were the only people that were willing to buy. There will always be a new bunch of people that come to buy, and that will again make sure that the demand for the company remains intact. So yes, it's a somewhat of a negative. I wish they could produce the number of cars that are there right away and sell them off so that the profitability comes. But you do have constraints on production, and they're doing their best that they can. So I don't look at it as a massive negative. It's just a small negative, but like I said, it's a good positive to have that you have such strong demand.
Hold is your recommendation on M&M?
For the time being, I would take some money off the table. I think valuations have moved up. I would like to get back in at the 2,200, 2,300 levels. I don't know if that's going to happen, but for the time being, I would take some money off the table because I think valuations have moved up beyond justification.
Okay.
Well, Alex, just one more point to add here. Axis Cap today said that there may be an overall weakening demand because now we're seeing price cuts. So it's actually a paradox kind of playing out where at one point we're seeing that sort of demand, but also Axis Cap believes that...
Okay, so Axis Cap is one, but so Puneet was pointing out this earlier when I was speaking to him about discounts or price cuts around this time. And Maruti apparently, 1st of July, often, practically every year, announces either a discount or a price cut. Because it is a period when you would think, with the onset of the monsoons, people have, there is a dearth of people going to the showrooms. Generally, you have demand that is sluggish. You want to push demand a little bit. And this is the rest of the industry also playing catch up and saying, look, why, the market leader is doing it, let's also cut prices. So I don't think that we should read too much into just that factor. Demand seems to be strong. I guess it's various other factors. Like Samir was pointing out, it's a confluence of factors. It's a reason for the stock price to fall after gaining, 60+% in the year-to-date period. Let's jump to the queries. We've got several that have come through, and I would like to remind you, if you've got questions for us, you can send them to us on that WhatsApp number that you see on your screen, or in fact on any of our social media platforms. We've also got Vaishali Parekh joining in to answer all of your technical questions. We are going to start with one, incidentally. Vaishali, this one's for you. Cummins is the counter that we're talking about, and we've got a viewer tuning in from Qatar. The first one, Anil, is asking whether he should sell. He's holding on to gains of 135% on Cummins. Should he book?
So, good morning. I think no harm booking partial profit because we've seen a one-way rally coming in, and right now the technical indicators are showing some signs of exhaustion. So either book partial profit, or I think 3,800 should act as a trailing stop loss. That should be the level that one needs to watch. If 3,800 levels break, then I think the stock is ready for a profit booking. But till then, either we can see some more bounce if market is holding on to these levels.
All right. Next counter we're talking about is ONGC. The question is from Mr. J. Bose. This is also a short-term query. Vaishali, coming back to you on this one, would you suggest buying ONGC at the current levels? And the time period is very short, about 15 days or so.
280 would act as a support. That would be the level to watch for to buy the stock, or else about 305, because 305 is the resistance level. And just a few days back, I think yesterday we saw a high of around 302 or 303. Yeah. So I think that is the level that one needs to watch, either in dip or giving up a new breakout.
Got it. All right. The next one's from Prabhu. And Prabhu's asking about Cochin Shipyard. What a stock this has been. He's bought at levels of 1993. Let's put up the chart and see where it's currently trading. So even despite the fact that he has not captured the entire rally, he's still gotten quite a substantial gain. I would normally have gone to Vaishali on this, but I'm curious about what Samir has to say. Samir, if you think that a 70% run-up in the price of Mahindra and Mahindra is reason to take money off the table, what would you say about Cochin Shipyard?
So I think honestly there's a reason to take money off the table, and I would sell because let's be honest. Okay, the shipbuilding industry in India is going to see great amount of growth. Cochin Shipyard is one of the leading companies in that space. Their order book is very strong. I agree on every point that is there on the fundamental strength that the company is displaying. But the problem is these are long gestation projects. These are not projects which get finished within 6 months or 2 months or 3 months. These take a year and a half for a lot of these ships, these larger defense ships to get built, right? Now, you've agreed on X amount of price. Now, during that period of time, if certain price variables change, if certain component price variables change, you're able to pass on some of it and not all of it. So your margins may not be as healthy as you think they would be. Plus, we are also assuming that they are going to continually be able to get large orders from the defense space and from the other normal general, dredging or whatever they're building. And it's going to, but like you said, when you talked about Mahindra, you talked about the fact that you have to wait very long. Now, if you place an order with Cochin Shipyard, you're going to have to wait extremely long. So maybe somebody who wants a ship will probably go to an international supplier if they have some capacity where they can give it to them quicker. So I would not put all my eggs in. I would not think that Cochin Shipyard can continue its rally. It's been a fantastic rally. Valuations are well above what the historical averages are. Also, we got to discount that historical averages have been very low because it was a PSU and PSUs traded at very cheap valuation. But even adjusting for that, I think valuations have moved up. So I would take money off the table. I would not be looking to buy, but I would actually take money completely off the table.
All right, fair point. We'll take a short break now, but we'll be back and we'll take more queries on the other side. Stay tuned. Welcome back. You're tuned into Ask Profit. We were in the middle of taking questions. The next one is State Bank of India. The question is from Asif, who bought it at a price of 833. Samir, coming to you on this one. While, of course, we're going to see a bit of a softer quarter for the banks this time, but from a longer term perspective, would you suggest holding on to it for somebody who bought it at 833? It's not a lot of profit that they've made till now on an SPI, of course.
So we are very positive on the entire banking space, right? Let's put it this. Yes, the banking industry is going through a bit of a tough patch because of the fact that deposits are not coming in the way the banking sector would like it to. But the minute you see the economy growing and loan growth picking up, I think you will also see the deposits starting to rise. Right now, some amount of the deposit money is moving in towards the equity markets, into GSEX. But as interest rates start coming down, I think the banking sector will eventually start getting some more of its money from the fixed deposits, from savings, CASA, whatever. And as that starts seeing an uptake, we believe the banking industry will do well. Now, SBI within that bank is the largest bank, and because it's a PSU, it's trading at a discount to the large private sector banks. But now SBI, if you look at it, has great subsidies which give a lot of value to the business. They will even look to list their mutual fund business. I mean, they've listed their life insurance, their general insurance, and now you probably see some more listing and value unlocking. And we believe that the gap or valuation catch-up could probably happen. Of course, it may not be the same level that ICICI, but we remain positive on SBI. We think any correction is a buying opportunity. Yes, this person has bought it near the top, but if it falls, add some more, but stay put. Don't sell it outright.
What if you don't get an opportunity, Samir, and if there's a time-wise correction in State Bank of India? Is it better then to average your cost over a period of time and you just keep accumulating?
So yes, you could probably keep accumulating, but then you can wait for 3 months. If there's no correction over a 3-month period, then you can. But like I said, we've been expecting the markets to correct. And when the markets correct, it doesn't matter what stock you are. Everyone corrects across the board. So SBI too will give you a buying opportunity at closer to 780, 790, 800 odd levels. At that time, you can add some more onto the stock.
Point. Solara Pharma, Vaishali, coming to you in this next one. We've got a question from VS Money. He's writing in from Coimbatore. He's at a loss significantly. In fact, he's lost 48%. So he's bought at levels of 1146. The stock is currently trading at 624. Yeah, so he's lost quite a substantial portion. He's asking, is there any possibility of him getting his buy price?
Solara Pharma, active Solara Pharma is right now at its all-time high. I mean, so
I'm not sure.
So he must have bought it.
Yeah, I'm not sure what
must have bought it much earlier. I guess continue holding, because if I'm seeing the weekly chart, it's quite on an uptrend. And well, we may see some near-term hurdle coming at around 680 levels. But above 680, the stock is ready for even 1,000 levels. So I would say it's a positive. It's showing all the strength right now.
Yeah.
All right. The next counter is Adani Power. The question is from Shubhodeep. They bought the counter at a price of 298. The question is, should you continue holding on to it? Samir, coming to you on this one, for somebody who bought at 298, an Adani Power, a considerable profit there. Maybe should you book some profits or should you hold on to it?
So I don't have coverage on Adani Power.
Okay.
But what I can say is the power sector for the next few years is going to go through a very positive patch, because we've actually reached a situation where the power demand is now beginning to outstrip supply. So you're going to see new capacity additions. I know Adani Power is putting in a lot of renewable energy capacity, which will obviously go on stream over a period of time, and that will allow the profitability to grow. But what I did last year for Adani Power, the valuations have again moved up far beyond where justifiable value lies. So if I were purely looking on valuation front, probably I would take some money off the table. But I am positive on the power sector for the next 3 to 5 years.
Vaishali, do you also hold the same view, some money off the table? And if you have a target on this counter?
Well, I would say technically it's showing a lot of strength. Currently also it is at a support level. So I would say keep a stop loss of 700 and hold on for this stock, because above 735, 740, this can in all likelihood retest 780 to 800 levels. So I would say keep a stop loss but continue holding for now, because there is no sign of negation or profit booking seen on this counter right now.
All right, standard disclaimer, this is NDTV Profit, part of the NDTV group, and it's owned by the Adani Group. TD Power is the next counter we're talking about, TD Power Systems. It's currently trading at 412 or thereabouts, and we've got Ratika, who is looking to invest for the long term. Do you have a view, Samir, on the fundamentals? Would you say this is a good counter to enter into?
So I don't have coverage on
Okay. Vaishali, what about you on the charts? Does it is this a good price to consider entering?
TD Power, the one which is at 400 levels, right?
That's right, 411. Yeah.
Well, no, I would wait for a little bit of a dip. I think the ideal level would be around 350, 360 levels. And anyways, even if I'm seeing the longer term chart, I mean, it is shown a lot of up moves. So I would say it's better to wait for a dip.
All right. Next counter is BDL, and this question is from Ankush. They bought the counter at a price of 1,593 rupees. It's currently trading at over 1,600 rupees. Sami, coming to you on this one, for somebody who's bought at elevated levels, we've seen the stock rally quite a bit. Should you continue holding on to it?
So again, similar story as Cochin Shipyard, right? The stock is in the defense space. It's generated phenomenal returns over a longer period of time. Valuations have moved up well beyond what I have comfort levels with. So I would take money off the table. But, the way people are talking about the spends from defense, the kind of interest that is going there, I won't be surprised if the stock continues to move up. But I would, purely based on fundamentals, I would take money off. I would sell the stock.
Would that also be the case for HAL, for somebody who's bought at levels of 1,109 and a significant profit? Would you take money off the table?
Absolutely. Across the defense space, I think valuations have moved up. In fact, I want to just bring one point to your attention. There was a news flash this morning that HDFC, that has a defense fund, is looking to stop getting additional funds into the defense space because they are also finding it difficult to find investment opportunities in that space for the time being. So given the fact that you have top fund managers also beginning to think that, look, valuations are beyond justification and there's no point putting more money into this space, gives you a very clear indication that, look, there is over exuberance in the space. Even if returns were to come over a 3-year period, the returns would be very subpar. You could walk away with maybe 7 to 10% CAGR because of the elevated valuation. And my basic theory is, if I were to put money to get a 10% return and I'm taking so much risk, I don't think it's justifiable. Because today, if I put money into a pure GSEC, I can walk away with 7% on the yield. And if interest rates fall by 50 basis points over a year period, I could walk away with close to 9 to 10%. So I could get 10% return with a risk-free kind of an investment. Why take risk and earn 10% return? So given the valuations, given what is happening, I would say it makes sense to take money off the table in the defense space. You have to look at valuation individually, but largely all of them have moved up quite significantly.
Fair point, and that's a very fair point that you made on the HDFC Defence Fund as well. We marked that. If you want to read about it, it's on the website. Quick view on Yes Bank. We've got Naveen who wants to know about shares that he's bought at levels of 24. He can hold for a period of 2 years. Vaishali, quick view. Should you hold on?
Well, I would say yes. Technically speaking, I would say keep 23 as stop loss. And once the stock moves about 28 levels, it brings in further conviction. So right now, observe a range of 23 to 28. But I would still suggest that might as well get into HDFC Bank or SBI or ICICI if that is the choice.
Okay, fair point. All right. That unfortunately brings us to the end of this edition of Ask Profit. We've run out of time. Even though I said that I would take Yogesh's question. Yogesh, hum kal lenge aapka sawal. Samir as well as Vaishali, thank you so much for joining in and for answering all the questions that you did answer. Viewers, like I said, we're out of time. From Smriti and myself and the team that put this show together, thank you so much for watching. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.